All right, everybody, welcome. This is CyberBulls episode 14. Stock price is at $222 today, and for some reason, I'm very excited and happy. Why are we a little bit better mood, even though the stock price is at 222? It's a huge fall from where it was before, but yeah, we're all hoping that this is going to be a big turnaround. So I think the big topic we want to talk about is Twitter. Is Elon done? Is he really done? As things are looking like it is, looking like by a few days it will be closed. Looked like he sold yesterday. Let's hear from the bulls what they think. I'd also like to review some of the key financials for Tesla. I know we looked at the Q3, but there's some key points here that I'd love us to just revisit and just remind ourselves the fundamentals. It's like these times when the macro is going around and all these confusing things are happening that we need to remind ourselves. The China demand and price cut, and other topics we'll talk about today. So let's get started. Hey guys, how are you guys both doing?
Good, Herbert. How you doing? Everything's
Doing
good.
great. Doing great.
Okay, up that energy, Christian. That's not the energy we want to hear at this
Low
point.
low energy right
What
now.
do you mean low energy? We just closed up 5%. What are you talking about?
Yeah,
Exactly.
no, it's my stoicism. I'm practicing my stoicism.
Okay. Let's start with this tweet that Xander did this morning. So explain it to me what you said. So first you said a tweet about a week ago, and you said, now your move, Wall Street, the time has come that you your boat full of Tesla, right? And so you're showing
load your
operating
boat.
margin. Load your boat.
That's right.
Because Q3 earnings came out and you're showing a graph of operating margin. And then
Right,
today,
as compared to the auto industry and S&P.
yeah. And then today you sent out a tweet this morning says, I know you're waiting for that Twitter overhang to clear, but your 3-day rule is up. So go ahead and explain what you're saying about that.
Well, the 3-day rule is that, if that's what you want me to clarify, is there. I actually did a little bit of Googling on it, and there's multiple different 3-day rules, but the one that I'm referencing is that Wall Street typically takes, like, analysts take about 3 days to digest the information, and then they go in or make their decisions. But then there's the other one that I read about this morning that references the after a high single digit drop like we had, and 8% or 6%, something like that, then it takes typically you should wait about 3 days before you pull the trigger on taking on any shares. But I'm just I'm being funny and saying, hey, let's go front run the end of the Twitter deal. The punishment you had enough punishment. I think that the 198 dip down was a nice bear trap done by Wall Street. It just clipped 200 and then ran back up. So being 10% up above that is looking good, but I'm not too excited yet.
So the explanation I heard, tell me if this is right, that Q3 earnings came out and it was a blowout quarter. But because of Twitter overhang, and everybody anticipated that after 48 hours after the quarterly earnings, that Elon could sell. And so the day after, Wall Street came out and they started to put puts, and they started to short the stock, expecting it to fall. And that's why we saw a huge fall that day.
That's one possibility. Exactly.
Yeah. So I think you're onto something. Remember, we were going through the last few weeks and Tesla was outperforming, and all of a sudden we got this down, just whacked. And I think it was that long Twitter, short Tesla trade, right? People knowing the deal is going to close, and there was that gap, that gap you can get to Twitter to the 54.20, and they knew Elon might have to sell. So in people's minds, everyone was scared to buy because they knew he would have to come in. So that was a great little trade for the last month, shorting Tesla, long Twitter. And I think that is now coming to an end. And the valuation, again, got very cheap. And I think buyers are now stepping in, knowing Elon has done what he has to do. And the Q4 looking like a epic quarter, or a great quarter in every way. So I think, again, no one really knows, but I think that's kind of where I put my hat on into it. And I didn't really think about it like that. I was just thinking it from a purely valuation point. But in a few weeks, things could get really out of whack, and I think that's what we saw.
Okay, let's deep dive if we think that the Twitter overhang is actually done and reflected the increase today, the 5% increase this morning, or is it still to come, right? So here's Ross Gerber sending a tweet this morning. He said, the Twitter-related selling in Tesla should be over. Deal should conclude by Friday afternoon. So overhang is already lifted now. And we already saw a number of things came out that sort of indicated that it really is done. And then there is Gary Black, who said, he replied back to Ross saying, I've been saying Twitter overhang lifts once a Twitter deal closes. I've also said that Tesla should rise 5 to 10% once the overhang lifts.
So today's 5%,
yes,
not part of it. That's what we're trying to say.
Well, that's what Gary, I think, is saying. But what do you guys think?
No, I think this is part of the overhang lifting because he sold Monday and we got that swoosh down, right? It happened yesterday, and now we're getting that relief rally, knowing he probably didn't sell today. And if the deal is going to close Friday, and we've heard reports that the deal is in people's desks, right, on the offices, the debts, the equity's all done, and usually sales take a couple days to settle anyway. So I don't think Elon's going to be selling tomorrow if the deal's closing Friday. So everything points to Elon has everything he needs. This is just my opinion. So I don't think he's selling any more Tesla stock. Again, no one really knows, but that's the way it looks like. That's the way the stock feels. So we'll have to see. But I guess we're going to see a 4 and 4 about Monday because that initial morning we saw that big gap down and huge volume, and then it settled off. I think that was Elon maybe raising a few more billion, or maybe a couple billion or 1 billion. I don't know. But yeah, so I think that's over now. But I've been surprised before. We'll see.
Yeah. So we're supposed to know Wednesday afternoon, 10 Eastern, I think it is. At that point, the 4 and 4 should be out or not out. Okay.
Yeah. It's 2 business days from when he does it, yeah.
I think the vast majority.
Well, we just lost you.
Oh, I got a phone call there.
There you are.
The vast majority of, it looks like the Tesla bulls thought and believe that Elon sold. There's a few that do not think that on Monday. So based on the technicals, Xander, what was your feeling?
It didn't quite look like it, but I mean, there was a big wave down. Typically, that's what you see, and it's sustained. But now I'm thinking about it, and I just realized that was pre-split. So it was a bigger. It felt like a larger price movement between when he starts selling and when he drops. So I'm gonna have let me take a look and see. I didn't. My initial reaction was it didn't feel like it, but logically, he might have needed to do a little bit. That's why he stayed quiet. But maybe he stayed quiet because you don't want anyone to front run. So it's really hard to guess. It's honestly it's just really hard to guess.
But the volume was really high.
Yeah,
and it started really early in the morning.
Yeah. Very, very high.
Okay. Well, so the good news was he sold on Monday, or he made.
Well, we don't know if he did. I'm guessing he did. Xander's thinking he didn't. So we'll know for sure tomorrow, but it's hard to know. Yeah.
And then it's interesting. Nothing happened today, right? There's tiny little cells. Yeah. Otherwise, it was a straight up day, right?
Yeah, pretty much.
So, and then all the news is coming out that he's done. So regardless of if he sold or didn't sell,
it doesn't matter.
It's like it seems like we're in a clear at this point.
You mean he's done with the deal, not he's done selling?
No, he's done selling.
We think he's done selling regardless.
Yeah. Okay.
Because let's say he did not sell on Monday.
Well, you said he's done. I'm trying to clarify. Do you mean he's done selling or he's done? Okay.
Both. I think he's done selling. So if he did not sell on Monday, what I'm saying is that all the signs are pointing that the deal is going to close on Friday. I think that we saw a few emails saying that the debt financing was. He told the debt financing that he's completing it Friday. So he's got the financing in place, regardless if he sold or didn't sell.
Right.
That's my point.
Correct.
Okay. So if anything, there might be a potential small percentage chance that it's going to be a huge hit. Like maybe he goes, funding secured. Friday he does it, and then on Monday he goes, "Hey, I got extra cash. I'm going to buy Tesla stock." I mean, that's a wish on our part. I think that's
definitely a wish on our part.
It's possible. It'll be interesting Wednesday to see if there's a 4 and 4. Because if there's not, then he didn't sell. And he was able to get all the equity financing he needed, or whatever. He made it whole. So
Yeah, I mean,
I-
obviously,
Yeah.
I wouldn't be surprised if the form came out tonight, because if you're
Okay.
his team,
Yeah.
you want that information out as quickly as possible. And typically when he sells, they get it out, I think, the next day. I don't think they wait
that's right.
the 2 days.
And listen, he's a super smart guy. There's a lot of different options that he could have pulled, not to use the word alternatives that he could have pulled to, make this happen. And, would he sell at 200? Right. So I had obviously the title of this show is 200 is what we hit 199 just recently. Is that the all year low? Is that going to be the
198.
Yeah, was it?
So
I forget the digits. What's the 198 and?
yeah. So first of all, Christian, I got to call you out,
59.
buddy, because you made a big deal about, like book it, market, 206 going to be the lowest. It's going to
That's
be,
okay.
well,
Remember, I deal in probability. So you're right. I missed that call, but it's okay because my valuation that I put in my mind is okay. If 198 is the low, we're talking 3-4% off the low. In my mind, I could live with that. I don't want to be 50% off of my valuation. I don't want to be 60% off of my valuation. So when I'm thinking a Tesla down here, I'm saying I want to be in this ballpark. And if we break it, I don't want to break it by 40% or 50% and hit 140. Because then I've done a bad job at valuing this company and the market. I got to think what the market's going to value it at its base rock bottom. And I think that it is valued at its base rock bottom. So I could be wrong, but you're right. I didn't catch exactly. And I think a lot of this Twitter deal, not to make an excuse, had a lot to do with it. But yeah, so call me out. I love it. Yeah, I thought the 206 would hold. I thought it would hold.
all the smartest people in Tesla community, as far as I heard, there's two reasons why it fell from 300 to 222 now and 198 2 days ago, right? One was the delivery miss and China softening demand, and two was the Twitter overhang. Every company was hit with the macro. Okay.
Right.
So obviously that was part of it. But the reason why we went down by 40% while Apple went down by 22%, something, in the last, 3 months, is because of these two other reasons. Correct?
But Herbert, I have to push back a little bit. I tweeted, this is why it's fresh in my mind. We were outperforming Apple. We were outperforming everything by a mile. It's in the last 30 days is when the collapse happened. We were trading over 300 as of a month ago. I remember tweeting it out, Apple, S&P, Google. It was outperforming Google by 50% on a 1-year basis, I think. It was outperforming Apple. It was in the last 30 days, almost like Wall Street knew the Twitter deal was coming. You might have to sell. People were scared. And they did this deal where they put the panic in. I don't know what they did. Oh, I don't know. I don't even say what or who. All I'm saying is the stock act irrationally off the deliveries. Now, it could have been all the deliveries. Maybe it was part deliveries and part Twitter gets to sell. So let's capitalize on retail worrying and let's short this thing down. They're going to get nervous. We're going to talk about deliveries. We'll talk about Twitter overhang, and it pushed it down rapidly. I'm not an expert in the mechanics day to day. All I know is Tesla was outperforming over the last 6 months by a mile. So don't say Apple was outperforming. It wasn't. It wasn't.
So Christian, are there any takeaways that you have so far from?
Yes, I learned a lot.
The 315 down to 200. What the call?
Yeah, no, I learned that things could. I mean, not that I learned. I know this, but like I saw it because my position, I was building heavier and heavier, and you can get caught into that sense of, okay, everything's gliding along. We're going into Q3 and a record Q4, and you can see how you could get smacked down real quick, right? So if you're on the wrong side of that, if you're leveraged, I'm not. I'm just saying if people are leveraged or something, you can get hit hard, and you can get hit hard quick. So all I'm saying is you got to be wary of that and learn how to position size. Yes.
Okay. So theoretically, it fell from the
310. I think 310.
The two issues have been resolved. Okay, unless you debate me if delivery shortfall is resolved or not, but the Twitter overhang should be. And yet we went from 300 to 198. Now we're at 222.
Right.
If those were the two reasons in the last 30 days, right?
Yeah, it's resolved. I don't know if it's resolved. The conference call, they spoke about demand being intact, and epic Q4. Jack Kirkhorn said we're going to do a record quarter. Short of 50%, but that could be 450 in deliveries. Then Elon backed that up. Then we had the price cuts in China, and we're hearing about sales being off the hook. So I think demand is to the side. Again, I'm just saying. And now we know Twitter looks like it's to the side. I mean, of course, anything could happen, but I think those things, if you're just asking the question, exit the stock price, don't think about the stock price. Have those issues been resolved? I would say clearly yes. Does the stock price could do whatever it wants, I guess, in the short term, but I think the issues have been resolved. I don't know, Xander. I think they're resolved.
that's. I think you're absolutely correct. What you're saying. It's just obviously an unsatisfying answer to me because I just want things to make sense. If it fell from 300 to 200 because of these two reasons, now you solved them. Should it go back up 300?
Yeah, but it's going to take time. It's got to take time, right? And
if it took 30 days, if it took 30 days to fall, it should take 30 days to.
Right, but
Yeah,
go ahead, Sam. Go ahead.
I was just going to say, I think it depends on the macro, right? So if where did that money go? Well, hold on, Herbert. Like, look, where did that money go? So if you capitulate and you finally go like, that's it, I can't take this. I'm gonna sell and I'm gonna go to the sideline and wait for the all clear. It's easy to sell and drop the price, but it becomes much more difficult in my mind to get back in and to go like, okay, well, it's going to depend on what the Fed's going to say, right? November 1st and 2nd is the FOMC meeting. And so then that might be where we'll see that big run perhaps. But again, that's just speculating.
My pushback to you, Xander, is that if I look at Apple, and I know we're two different companies, lots of different product issues and so forth. I looked at just now their stock in the last month. Their stock was at 150. It fell and then it went back up. It's now at the same price as it was a month ago.
Yeah, but they barely fell. What did they fall? 136, 138 or something?
Yeah, right. 138. How'd you know that?
I mean, I keep an eye on
but
things.
it's a percentage. It's a percentage move. The percentage move was pretty, I mean, it's a lower.
Okay, my point is that it fell and went back up again. Yeah. And so you were saying it's the macro and all that. Well, okay, where did the money go? Well, this is what happened to Apple. So
yeah, but look what happened to Apple. You dropped like 10%, not even. $12 into 150 is like 100 is 8%. Tesla dropping from 300, 100 into 300 is 33%. It's a much. Think about market cap. Think about how much money that is. Then we could do that, right? We could look at how much is 8% into 2 billion. What is that? 1.6. So or 16 million. Or I just put a tweet from Jeff Lutz, and he said the Twitter overhang cost Tesla $300 billion.
Right. I have to say though, I'm on Herbert. I don't know if this is good or bad. I'm with Herbert. I believe I could believe. Remember, look, I'm going to go back to my original 300 to 330 by the end of the year. I believe if it takes 60 days, I believe we can grind back into that 300 area because of the strong Q4 and because of the valuation. I think we got as low as 60 times trailing. It was like 62. I mean, into a record Q4, which is going to drop it into the 50s. I mean, this is what I'm saying. Like, I know valuation doesn't matter when sentiment, and it could go lower, it could go high. I get all that. But valuation has to be your rock. If you have a company that's trading at 60 times trailing earnings going into a record quarter, which is going to drop the multiple more, and the stock price could go up higher, even if that is the case, and we're going into next year, it's going to grow another 50%, 60, 70% in earnings and revenue and all this other stuff. I don't know how eventually that's not a great buy. So that's my hat. I can't worry about all these, we talked about, I can't worry about all these little knickknacks, and I want to catch the right dollar, and I want to catch it at 201. My buy price is 206.87. I can't do all that. In this ballpark, I think it's still value, and it's a great return if I'm going to hold it for the next 3 to 5 years. And that's how you have to invest. You can't invest day to day saying this might happen, this might happen, so yeah. Go ahead.
Okay. Well, tell me about macro. So we started to hear little hints here and there that it's maybe that the Fed may pivot, or I heard the first one was instead of 75 basis point, they may go 50 and then 25 the following. And then I saw today that the Senate leader or something, one of the Senate people told the Feds that, they better pivot.
Right.
Tell me what you've been hearing.
Real fast. So the Fed, I think, has finally seen the data light. We saw daily one of the Fed governors come out and say, hold on, I'm worried about the economy, and we're not raising rates infinitely. So you're seeing some politicians, like I said before, you're going to see some pushback as the economy starts to wear in. If jobs are going to be lost, you're going to get a little pushback on the Fed. We're not just going to sit here and say, "Oh, go ahead, pal, do whatever you want. You want to crush the economy to get inflation down 3%, a month ahead of schedule? Go ahead." That's not going to happen. So you're right. You're seeing some pushback, and I think what's going to happen, again, this is just my opinion. I think they're going to go 75, and I think what they're going to do at the meeting is they're going to say, it's not 75 like autopilot anymore. We're going to look around, and maybe the next one is 50. So it's not a pause and a flip down interest rates. It's maybe a ratcheting down of the level of the increase, meaning we go to 50, and then maybe we wait and we see what's going on, and then maybe we do a 25, and then maybe we're done. Like, so it's taking the accelerator off. The market has rewired their brain from wanting a rate cut to just slow it down and maybe knock the rate down. Don't go as fast. And that's good enough in this economy, because it's still not a terrible economy. I think the Atlanta GDP has got us growing in the twos. I know it doesn't feel like that, but so I think that with and earnings is coming out today. So I'm curious to see what it is. I can't look now, but we're doing it. But I think we had Microsoft coming out and a couple others. Andrew, you're probably on it, but yeah, what do you think?
Well, on the first part, regarding the pivot, I completely agree. I think the word pivot has a new definition with this recession. So having a different word would be better, but it is that. It's just ease up, right? If they change the narrative and the market is priced in 75, what is it, something like 98%, or it's or is it 100? But the market's pricing in that it's going to be a 75 raise. So if they do you think that them using different language is enough, or it has to be lower than a 75 for the market to rally? Because
No,
I don't think they want to rally, right? Don't they want it to just people at least to
no.
start?
That's a great thing. So there was a leak, I think it was in the Wall Street Journal, where it said exactly what you're saying. They don't want the market to sniff it out and start rallying, because that would defeat the purpose. But in the article, it said that the Fed was finding a way to do their 75, and then at the meeting to articulate that the next move would not be a 75, meaning we're going to step it down to a 50. But they didn't want to let that kind of get out too early, because the market would front run that and start rallying, which they don't want, right? They want markets to be subdued, if anything, just be choppy or hang around here. So we'll see. I think the market has been so down for so long, in my opinion. And I think that if there is a hint that the Fed is going to start going at clips other than 75, meaning 50 or 25, and then kind of maybe wait for a meeting or two, I think that's bullish enough to get the market not rocketing, but at least to stabilize and maybe grind higher into year end.
Is there an impact? Like, I'm trying to think this through. If the market rallies, meaning cash comes off the sidelines, gets deployed to these companies, the companies, what do they use the cash for, right? It's not like you're changing your behavior in terms of going shopping or whatever, but perhaps is the worry that the consumer feeling wealthy again, or whatever, feeling like they have money, or they're watching their brokerage go back up, is that what the Fed is trying to stifle?
Right.
Is it just
the
that
Fed,
feeling?
Yeah, the Fed's trying. Remember, I answered your question. I said they wanted to kill everything. They want you to feel poor so you don't spend. They want your brokerage account down. They want your bank account down. They do. They want housing down. They want everything down so inflation comes down. So if Xander feels poor because his stock portfolio is down, I'm not picking on you. I'm just saying, or you or me, anyone.
We all feel poor.
Right. If we feel 40% poor when we go look at our statement, we're less likely to make that purchase, because we tell our wife is looking at you. What you doing? Oh, nothing, honey. You're down a few $100,000 in your 401k. You don't feel like you want to go out and buy a house. You don't feel like you want to go buy a car. So, I think that's what they want, because that's how you bring inflation down, right? People stop spending, and then prices will adjust accordingly to the demand that is now the new demand. So it's not a perfect science. It's more of an art. But yeah, I think that's what they're trying to do.
So Future Fairmont puts a comment. I must have watched 25 talking head videos that said the Fed was in a corner and could not raise rates. But I guess the question I have for you guys is, you guys have taught me, and you guys can always explain that the market is future it's ahead. It's ahead, right? It's forward looking. And so it's already built in the 75 basis point. So when it comes out next week and they announce that they're going to do a 75 basis point, we should not expect a crash in the market. Now, if you start hearing now little tiny hints that they might actually soften up, become a little bit more dovish as they move along,
Right.
shouldn't
That's the
we
game.
see
Right. Yeah.
stock rising earlier than waiting for it to actually happen?
So this is tricky. I'm just going to give you my experience and the way I would look at it as a market and what I've seen over the years. The 75 doesn't matter, right? That's baked in. So when they announce that, the market knows that. What will move the market is when Powell comes out and does his press conference. If he seems dovish and talks about, maybe we go 50, maybe we look around, I think, this is my opinion, that the market would rally on dovish comments. Now, if he comes out, does a 75 and says, you know what, guys, inflation is still too high, we're keeping pedal to the metal, and he sounds hawkish, I think the market either stays flat or goes down, because we're right in the same trick of the Fed is going to be pushing harder. It's going to be harder to get earnings traction. It's going to be hard to get the consumer going as rates keep going higher. Now, my guess is the Fed is going to be more dovish, and here's why. Our 10-year was springing up to 4.5%, right? It was pushing it wasn't there, but it doesn't go to 5. We pay debt on the trillions of dollars of treasuries. If the interest rate goes too high over time, literally the interest on the debt is going to be more than Social Security. It's going to be more than government program. It's going to be more than military spending. So they have to be careful, because they cannot spend the budget on basically the interest of our debt and neglect all these other things. That's why I think the Fed is in a box now. They tried to front load it, get as much done as they could. And now I think they're going to take their foot off the pedal, depending if inflation at least comes down a little bit. I don't think they can go any harder than they've done. They got to take a break. Yeah.
Google missed. You asked about that earlier. Google reported 1.06 missing expectations of $1.25, down 5% after hours. So that's YouTube revenue, right? So marketing
Right,
is
ad business,
down.
the ad business. That's why Meta's down, Facebook, because the ads, no one's doing ads because it's a tough environment. Those stocks have got crushed. I love Google. I sold Google like months ago, knowing, because I even though I love the business, their main revenue and their main profit center is the ad business. And if businesses aren't paying up for ads, long term, Google's a great company, but short term, they're going to get caught up just like Meta did, and they're going to get whacked, right? Where Tesla is still beating on earnings, and their earnings is accelerating. That's why I've been talking about for the last, however long we've been doing this, that Tesla at the slower valuation with the earnings growth and the earnings acceleration is cheaper on a relative basis than something trading 20 times. Tesla at 60 times with the earnings growth is a better deal, and it's better value than buying something at 20 times and the earnings is decelerating year over year. Yeah.
So if the where we had the multiple compression, we're now in supposedly earnings compression of stocks, and so that multiple will, that the EPSs will come down and expectations should come down. Is that setting it up? Because the Tesla is just, they guided for blockbuster numbers, or epic fourth quarter. Is that, in your opinion, is that enough for the market to finally change their tune? I keep saying that Wall Street is just going, they're setting up a trap for weak hands and bears, and then they're just going to pile in. That's what I think. Do you think that's a possibility, or what percentage, what probability would you assign to that?
The way I look at it, since Google's earnings, I don't know about the other ones if it was Google specific, but if the earnings are still bad of these big companies, and the Fed, we still have inflation, I don't look at it as Tesla doing what we think they're going to do. Oh, it's going to hit 400, 500 in 6 months or a year. I'm looking at it like this. The valuation is compressed, but I don't need it to be like a huge valuation. Meaning, if they can do close to $5 this year, and you knock the multiple down to 50, you have a $250 stock price. I know it doesn't sound exciting, but we're at 220. So it's a long-term investment, And as slowly the Fed, gets off the wheel and interest rates come down a little bit, which makes car buying a little bit easier. What I'm saying is Tesla has, and the Inflation Reduction Act hits next year, and it looks like China demand. Tesla is the best positioned right now to be the alpha dog of these mega caps, better than Apple, and it was doing that. It was outperforming. It was only in these last 30 days is when the compression hit on Tesla. So I think if Tesla reports a great Q4 and they blow it out of the water, again, I think you don't need it to rocket. What I'm saying is 270, 280, 290 could be in the cards by the end of the year because the valuation is in so much and the earnings is growing so much. I can't see it going back under 200 with a blowout floor. It'll be trading at like 40 times trailing a company growing like that. It just doesn't compute to me. So I think money will flow there. Yeah.
Yeah, but you were wrong when we were at 315. So how are we supposed to trust you now?
Yeah, you shouldn't. Everyone should do their own homework. This is not financial advice. Yeah. This is just the way I'm thinking about it.
Seems to me that's actually good news that the earnings, Google misses earnings and other companies miss earnings. It's actually good news.
Microsoft hit. They beat.
Okay, good. That's good. So maybe the market, it's a Google thing. Yeah. Facebook thing.
You know what I mean? Like you actually want to see the other companies not doing well, because then it shows that the Fed may actually more likely they'll pivot back up again if they start seeing the damage that's happening. So,
right.
And then if Tesla continues to perform really well, the question is, people look at the automotive market and they think that it's going to get hit hard next year in recession. So despite all the words that Elon said in Q3, I think there's still that's my guess that a bunch of people still don't believe that they're going to be safe in a recession.
Right, but that's it. If you view it as like, where's the upside? Like, which company will get you the upside on your money that can outperform treasury bills and all of that, right? Like the reward has to be worth the risk, and then it's just logical to me that I hear people selling Apple to put it into Tesla and right. Now because of it. Go ahead, Christian.
No.
You look like you were going to say something.
No, I'm
right.
listening.
So the question I've got, and I'm sure everybody else does, we all know what the financials are for Tesla. We know that they're very strong. I guess my question is, what does Tesla have to show in order for the narrative to change? So I wanted to show this, Xander showed me this tweet that James Stevenson did the day after the earnings report. And he says that, Tesla's profit cumulatively since becoming a public company, a larger positive number than the worst the cumulative deficit ever got. So it took them 11 years to finally break even. So if you every year there's a loss. So you add up all the losses over the years. And not only the last 3 quarters, but in the last 3 quarters, they added $9 billion. So this is I'm going to add this and show you this visual here, what happens. I'm playing it now. And so basically the GIF is showing that, over the last 11 years, the losses keep mounting for Tesla. And then at the last 3 quarters, it skyrockets up to become a cumulative profit. And we're talking $9 billion of profit in the last 3 quarters. So basically, it shows a story, right? This is a company that has been building a car from scratch. Took them 11 years. They've continued to build losses because of the factories that they're building and expenses and so forth. But now they've got everything basically settled. And the revenue and the profits the gross margin and the profits is skyrocketing in the last 3 quarters. And then you can see that this is an exponential curve. It's going to keep skyrocketing even further. So how come that is not enough?
It's enough, Herbert. Investing is not a straight line game. Let me give you a little quote from Munger taught Buffett. Buffett wanted to buy companies that were okay businesses at rock bottom prices. Munger started change. That was the Ben Graham way, right? Mm-hmm. Munger changed it. Let's buy great businesses at fair prices. So when I look at Tesla, I see a great business at a fair price now. So I am buying. So when I was buying back in that other dip, that's fine. I'm not far from when it dipped and then it came back down. We're similar to those levels. The name of the game is let the business do what it needs to do. And over time, right, the weighing machine, the voting machine in the short term, the weighing machine in the long term. As Tesla keeps continuing to do $3 billion in free cash flow,
Yeah.
15 billion a year in net profit, and more to come, right? Doing our research and making sure the story's intact, the stock price will follow eventually. So the name of the game is stay in the game, have cash available to take advantage of the market's irrationality, which I do, and I would put that out for the audience, and be patient, and while you're being an investor, do other things that you can do.
No, we
Research
lost
other
you.
companies,
Can't
do your
hear you.
job. Can you hear me, Herbert?
Christian, we lost you. So
No?
I'm going to go ahead and share another screen here. So in
Wait,
addition to,
Herbert, but before you move on, yeah, Christian, figure it out. The thought that I had just now when you were showing that chart. So Tesla did this in a bull market. What is any? Because I keep hearing, I show the earnings, I show this stuff to the Bears friends that aren't as brainwashed as me. And they go, oh, competition, right? The same old story. So how is Rivian or any of these companies supposed to weather the losses in a bear market when Tesla did this during a boom market?
Yeah. Yeah, we all are anticipating many cars to fail. So let me share this perfect timing, which is the market share. So one of the big I think disconnect that people have is whether or not Tesla is recession resilient. And one of the arguments is that the market share for EVs is so low. So right now in Q3 2022, Tesla's market share in US and Canada is at 3.5%. And then in this article says there that it's in Europe and China, it's slightly below 2%, really low. And then if you see this graph here shows that that we're only at 2.5, or again, in Europe and China, it's 2%. And in US, it's at 3%, 3.5%. That's so tiny. That is such a small amount of, the vehicles, sure. So that they're at the very beginning. So that's the, whether or not people believe that the demand, there's so much demand available because people need to buy EVs versus, even in a tough recessionary market.
Yeah, I think total cost of ownership makes it a compelling reason, and then also the residual value. So being able to sell an ICE car as we continue to adopt EVs, the residual value, right? There's not going to be, the market starts to diminish. Obviously, that's still going to take a long time to become worthless. But those are the two things that I think about when I see that.
Yeah, we were debating the demand story for a while now, and guys, I think we figured it out. We heard the Q4 call. We see Germany. What was it? Midnight Cherry got backlogged by 6 months. That color. We see China. Yeah,
I didn't hear that.
They put out the new corner, and they got pushed. They're like, oh, I want that color, and now I got to wait 6 months because everybody wants it. So what I'm saying is, and Herbert, it was like going back to what we were talking about before about everyone in the EVs. China, these Chinese EVs, yeah, they're good, but they're not making any money. And I'm hearing reports that some of them ain't going to make it. So we think that all this revolution is occurring. And to me, it's more of a Tesla story. Tesla, I don't know if you want to call it whatever you want to call it. They've already climbed the mountain, and now they're in the position to capitalize. Where Xander's right, the Rivians of the world. If we go into a major recession, and Lucids of the world, and Neos of the world, and Xpeng, who is the most positioned? Who is making the most money on all these cars? Even if Tesla's growth rate comes down to 40 or 45%, they are making so much per car. They're stacking $3-4 billion to their cash balance sheet every quarter. I mean, this company is becoming impenetrable. And then you go to the energy business, and I just saw articles. Mega packs are in demand all around the world for energy storage in Europe and in Canada. And we hear about the Gigafactory maybe, in Canada. I think it was I don't know if it was, what was it, Quebec? With the Inflation Reduction Act making all these things cheaper. Imagine the battery pack getting cut in half, the cost of it. What is that going to do to Tesla's margins, right? And again, because EVs, the penetration is so low, Tesla has a tailwind at its back. So I just think right now everything's lining up, and we get this Twitter deal done. I think we're in a great position here.
Is there a scenario where there's a pretty significant recession next year? And because people start seeing what's happening to all the other companies, like you just said and what you guys talked about, that Tesla's stock price could actually rise?
I wouldn't see why not. And
even in a recession. In fact, because of recession.
Yeah, I want to hear from Xander. I saw a chart today. I don't know how accurate it is. It was from the guy I talked about, Chris Koviaco. It showed that there was a little bit demand in housing and a little bit of demand in cars. You would think it would be falling off a cliff, but it seems like we talked about Tesla being resilient. It looks like the consumer is very resilient. As much as we think it's going to
US? The recession has not hit the U.S. That, of course, that they're just projecting that to happen next year.
But here's the thing: if the Fed is going to lighten up a little bit at the end of the year, and they're not going to raise rates as aggressively to prevent this, then it's going to give the consumer a little bit of a breathing room because rates won't be rising. If anything, maybe they cut in 23, and we just have a shallow recession, not a major one.
It's Stephen Piccolo. Asked Christian if everything is lining up. Not sure what he means, but Christian, is everything lining up?
So it depends your perspective. If you're a person who bought Tesla at 1,000 before the splits and everything, it's not lining up. You're down big on your position. If you're someone new to the Tesla story or someone that's been dollar cost averaging and you're getting prices and you understand, I think things are lining up. Again, this is not financial advice. I look at this company, I look at the quarterlies, I look at the cash they're printing, I look at the demand for the business, I look at the different businesses they're doing it, I look at the execution, and I say the things that have been holding the stock back is now lifting. And the business is the business, and the valuation has been compressed so much that as the earnings grows, it's going to make this company look like an undervalued company where money wants to go to earn a return on your capital. So in that aspect, yes, I think things are lining up. Yes.
Okay, well, let's go ahead, Sandra.
I think it's lining up very much. You have, here's a State of Michigan Retirement System has more than double its stake in Tesla Inc. The fund purchased 494,000 shares and now owns them for a total of 191 million. Kathy's buying. This is what I've been saying, right? Like the funds, you're going to have a pile-in that's going to occur. So to answer your question, whether it's lining up, absolutely. I think that this is like the growth story is intact, and for 23 is going to be just huge, right? Those factories that everyone seems to have forgotten about are going to be ramping, and if you're going to say, can Tesla's stock price rise? Despite the macro, absolutely, because if they can continue to grow their earnings per share, right, at the end of the day, that's what Wall Street is looking for is earnings. So that's how you calculate those. And so in my opinion, I think it's all there's going to be a nice recovery, and I won't be surprised if what do you think? 500 by the end of next year, or 4? What do we got?
Come on, let's not get ahead of ourselves. But well, let me ask that question. Okay, so you said, we've all been saying this for many of these calls and these shows, is that earnings is what matters. It's what's going to drive the stock price. Well, we went through Q3 earnings. So far, nothing. It's only 30 days. I gotcha. Now, when we do Q4 earnings and then we do Q1 earnings, how many blowout earnings will it take before what will happen to the price? You know what I mean? Like, you tell me earnings impacts the price, but what will happen by, let's say, Q1, end of Q1, if everything hits perfectly exactly what Tesla is projecting?
Forget all that. The answer is to forget all that. As many as it takes. As many blowouts as it takes is what it'll be. Meaning if it takes, no, it's not boo. If it takes 12 months and they pack up earnings after earnings and the multiple is at 50 or 45 and they do another blowout, eventually the stock price is going to explode. So a long-term investor, which I think you are, Herbert, and I know Xander, you are, would look back and say, I got all day to wait. Let the business execute. and they'll do blowout and blowout and blowout. And a great investor, Wall Street doesn't want to make you rich easily, Herbert. They want you to work for it. So you might have to sit there for a couple of years before you get your triple. They're not going to give it to you in like they used to give it to you anymore. Okay, you're going to have to wait, and you're going to have to let the business fundamentals play out. So as many as it takes is the answer.
Yeah, it tripled from 2012 to 2013. And then it stayed flat for 2013 to 2013.
Exactly.
Yeah,
and
but-
then
but-
it went boom.
And then it's
But remember
20x.
that?
Then it's 20x.
That falling, and they're going further into debt.
So
Right, once you get out of it, that's when it can do it.
we got to hang on. And
Yes.
even the stock stays flat or goes down,
Yes.
just hang on, because you know
And
that
do
at some
your
point it might take a
research,
year,
and
it might 2
Yeah.
years.
Yeah.
Okay. The problem is, I really do feel that in the last year, this year specifically, a lot of retail investors they got hurt, they sold. And it's actually a disservice when we all kept saying, and I don't know if I said it, but I will include myself, 290. Oh my God, I'm going to, pull out all my money from my couch, and I'm going to, I bought
Herbert.
today and I bought today and I bought today.
And I got to stop you.
How many retail investors put in all their money
but
at
you said up.
290?
I didn't say anything like that. I said by the end of the year, we would be sitting at near 300 to 330. You told me that I was crazy. It's got to be way higher than that, Chris.
I thought it was like
Wait.
350. Did he just
Nobody.
lower it? Did he just lower his number?
No,
Nobody.
950
No,
to
no.
1,000, Herbert. Was it not?
My prediction for
You said
6
it was going
months
to be
ago.
1,400,
No,
1,500
No.
by the year end.
I did not. No. My prediction was
I need the tape.
1,200.
I need the tape.
I got the tape. I've got all the video recordings. I said 1,200. And when did I say it was going to happen? I said January 5th.
Okay. And what
A few
was my
days after the Q4 and then the Q4 print numbers.
Fair enough.
Yeah.
And what was my
That's what I
end of
said.
year target? What was my end of year target? Didn't I have a range between 950 and 1,000? Didn't I say that?
Yeah, I think so. Yeah, you're probably
Okay. So
going to be
I'm
end up
not
more
telling
right.
anyone to get any money out of any
This
couch
was
cushions.
This was
I
5
didn't
months
tell anyone
ago
to win.
when we were all very bullish. And
Yeah, we
all
get excited.
were like
I'm still excited about the business. But
But
we're
by the
in a
way,
tough
you owe
time.
me a coffee, buddy, because I said to you that on AI day 2, the stock will fall and go and not even up. And you remember that bet? And you said it's going to go up, and I said never does. So I won that bet.
Wasn't there something else that happened after AI did? I can't remember what it is anymore. But look, that's why I say, what's the takeaway from all of this? Is no matter what the fundamentals of the company,
Patience.
Wall Street and macro can play. What do they say? You gotta be. The market can be irrational longer than you can stay solvent. So
Yeah. You guys repeat that every single show.
hey, well.
No, we don't. Xander, that's awesome. You're learning all the good lines. I love it. That is true. Do you know how many people? Herbert, hold on. This is important. Do you know how many people? We don't know them, and they probably very few admit it. I've seen some people tell stories about margin and how they got caught up in it this year, and they lost a lot of their Tesla shares. There's been a lot of people, especially retail, even some hedge funds. I don't want to give them a break. That blow up every year. They have a blow up. They get too cocky. They get too aggressive, and they blow up their fund or they blow up their account. Okay. Wall Street Bets was a big thing. We don't hear anything from Wall Street Bets anymore. How many of those little retail accounts on Robinhood have been blown up, right? Because they're doing these options and then they're YOLOing and all this stuff, right? They learned a lesson there. So I want everyone to do well. But what I'm saying is, if you go into investing thinking you're going to get rich overnight, you got the story wrong, and you might get lucky. But if you get lucky, it's probably the worst thing that happens to you. Because if you get lucky the first time, you're going to keep thinking
bad.
you could do it every other time. And after you made a big winning, you double down on that winning, and it goes to Zippo. So I think the better thing is the better way to win. Well, a good lesson is when you get some pain initially, but you don't give up and go away and say, I'm never going to invest again. Learn, read books, watch the greats do it, and get better at it and stay in the game. That's what they should do.
Well, here's what I've learned. Long-term investor. Then I did a long-term leap till June 2024. Mm-hmm. It was at $300 for June 2024.
Which
so
still
I feel
might be fine.
I'm still fine. I'm comfortable with that. And then I got greedy. And I started going Q3, Q4 is going to be blowout quarters. And so I did some, what do they call calls? These are calls.
Yep. Which I warned you against, which I let for the record.
March and April.
Yeah.
So at least good news
Got
for me. I
time. Got
didn't go.
time.
I did not
Yeah,
go for a
got
week.
time.
I did not go for 2 weeks. I did not go for a month. I went for June or March and April, which is over 6 months ago. By the time I started, it would have been 6 months at the time. Now you warned me, and I said, yeah, I am two things. I said, if I lose that money, I'm fine.
That's
right?
fine.
And
Yeah,
you warned
that's
me,
fine.
and I said yes. And two,
You're a big
you
boy.
asked me what kind of person am I? If the stock price is low, would I be okay with that? And I said yes. Now, obviously, I was a little sad, sad, but I'm like you said, I still am fine. Am I fine, guys? March and
I think you're
April.
fine. Yeah.
And am I going to be at? I think
I
one
don't
of
know if
them's
you're
at
fine. I don't know
300,
exactly
and
what
one
you
of them's
did.
at 316.
And I'm glad you didn't do a 2-week call because I thought I think
Right.
you're crazy.
So are these calls still going to be okay, or what? 300 and 315, I think, March and April.
No, they could still be in the money. You still might do great with them. What I'm saying is, as long as you know what you're doing and you position it, and I think you position it rationally, and you don't overdo it in anticipation. Oh, I know this is going to happen. Because when you know something's going to happen, the odds are it's not, right? So
It's exactly what happened.
Right,
The odds of what I thought was really high,
Right.
which is Q3, Q4 is going to go and the stock's going to go up, did not happen.
right. And now
So
here's the thing. Yeah, here's how markets work.
I will
Go ahead.
never do 6 months calls anymore.
So
That's it.
Yeah.
I've
Oh,
learned
yeah,
my
but-
lesson.
Go ahead,
So
Dan.
you didn't buy some more and average down when you were at
Well,
200?
I don't have any more.
You might not have any more money.
I don't have any more free
See,
cash. But because of the world is crashing and everything, I'm trying
It's hard to do.
get cash, and I'm trying not to be greedy anymore. And but yet this is the time to be greedy, right? So it's like,
That's
Right.
the hard part, right? That's the hard part.
Like,
is to have any ammo and to anticipate the downside. So this is where you can't be greedy, because if you go too early, then you don't have
Right.
anything left over to average down. But by that same conversation, when we dip below 199, I could tell you multiple people in the Tesla community that changed their order, and then they're like, ooh, it hit 199. I had a big order for 199, and now they cancel it, and they do a tiny little bit. But I'm like, well, do like half, do maybe a third. That's what I would do. How much more downside do you think you're going to see buying shares here? Like, why are you being greedy on the downside? Because now, what if the Twitter deal announcement comes out now, and now you just start running, and we skyrocket right to your 300 strike price in a matter of weeks. It can happen. It can happen very quickly.
it's so easy for you guys to say buy low, sell high. So easy to say that, but it's so hard to
That's the name
actually.
of the game, Herbert. You're
I
not
know it
getting
is.
that. No, you
Of course
don't.
I know. I guess I
See how
like
you're
to look at
depressed right now?
companies.
Look. See how you're depressed right now? You're saying, I
I'm not
knew what was going
depressed.
to happen, and the
I'm fine.
deliveries, and I bought my calls, and it was supposed to rocket. I don't
And
get
I'll
it.
never do it again. I'll never
Right.
do it
Let me
again.
tell you something. See how you're all depressed now? We're like, oh my God, the stock hit 200. Do you know how it'll reverse? And you won't buy a share.
Right.
Money will come in, and it'll rocket to 280. You're like, how did that happen? I didn't think that was going to happen. Exactly. You didn't think it was going to happen. That's why it happened.
Yeah.
It's
and
the
then-
opposite of what you
and-
think's going to happen.
Of course I know that,
And then-
guys. Jesus.
No, you
Mark-
don't know
Mark-
that.
Mark his words. We need to have a bet on this, because I bet you if that call ends up printing him, 100%, and we rock
Right.
it to
I'm a
350
genius.
or whatever.
I'm so
Right.
smart. Yeah, I'm going to hear all
It's gonna
that.
be
I hope
like,
it doesn't work out. I don't want
I'll
to hear
never
it.
do it again. But
No. It's going to be, I'm so
I'll be
smart. I
okay
know
with
the
it.
call.
Okay, let's just review. I mean, I think we've all said the same thing, but this is, sometimes you only learn when you actually go through it, right? Which is when we say that you're going to make a bet on an options call for 6 months, anything can happen. Even when no one thought the stock would fall from 300 to 200. No one thought that would happen.
Right, but-
So, and now good news, it was 6 months, so I still have time to bank out. But the whole point is that it's a gamble. When you're doing 6 months or less, it's a gamble. I think that if it's 2 years, then it's not a gamble. That's an investment. Maybe a year, still an investment. Anything under that,
But
you're
even
gambling.
But look, all of it is a gamble. Look, at the end of the day,
Sure,
it's
sure.
a gamble. It's just a matter of probability.
Yeah.
So Again, right now you're saying you'll never do it again, but we know how greedy you are.
Yes.
Right.
Yes.
So then if you win, you're going to, so it's really important to lose, in my opinion, early on
Thank you.
your. But as in my journey of investing, I lost like a giant amount of money at the time. It felt like I made a terrible mistake, and this was with TVIX during the 2020 drop. So I didn't have enough information, and I was correct. I bought it at like 180. I bought it at 220, and then I finally had the courage to do a large amount when we were at 800 coming down on TVIX. So if I would have just held it, I would have made a whole bunch of money. But the point is, learning that lesson early on made me realize that if whatever financial decisions that I'm making, I'm good with it. That's why I say, like, are you, if that's why we say, if you're making that decision, you have to be okay with like 100%. We can go back and check the tape. You have to be okay with losing all of it and not having these regrets. That's the problem. You're having regrets. And
No, I'm not. I'm not. Just remember what we said at the very beginning. This is not all my money. This is less than, remember you told me to put 10% in options and I ended up doing just 3%.
No more than 10.
No more than 10, agreed. And I actually did not decide to do 10%. I just went with, I'm just dabbling 3%.
Right,
so I'm not like, if I lose this money, it's like a big deal. This really isn't. It's just, a little bit of this. I'm trying to learn, right? Trying to learn.
Are you glad that you sold shares down wherever that was and bought that leap and experienced 100% and didn't listen when we said sell?
No, yes, I would. Yes, I did not listen to the sell. Let's see. There you go. So here's what I've learned. Okay, guys, I'm learning. I am not you, Xander, and I'm not you, Christian. Get what I mean? So I don't want to look at this. I don't want to look at the stock daily. I'm not here trying to figure out the astrology of the technicals.
I agree with you.
And so right. And so it's like, great, that works for you, Xander. So for it doesn't mean it's not me.
Yes.
So I don't want to do that anyways. And so I don't want to do options. That's my point. I'm willing to do the leaps. I'm so glad you taught me that. I think leaps are a great thing for long-term investors. I'm going to save a lot more cash, is what Christian taught me to do, not to be too greedy and try to go all in there. I need to prepare for big downturns that could happen, even though the world looks like it's going to be amazing and optimistic, because I'm an optimistic person. So I always think it's going to be beautiful and wonderful every year. And that's worked well for me. But there are going to be years where there's a huge hit like today.
I
that's
agree
fine.
with you, Herbert. Let me say this for the audience and for my own head. I know I'm going to sound crazy right now with inflation. I still have lots of cash. Now, it doesn't mean I'm not bullish, and it doesn't mean I don't think things are going to turn up. But what I don't know exactly, so I still have buffer, meaning if something goes out of whack, I have cash to buy dips. Now, I'm in enough that if things go really well, I'm not going to regret it saying, oh, I wish I was all in. No, because what I have in will do very nicely. And if what I think is going to happen doesn't happen, I can buy those dips calmly and quietly and without worrying about YOLOing or doing all this other stuff. So it's a more conservative approach, but I can sleep at night. So it's what works for me. I have a little bit of my leads, I have my shares, and I have my cash cushion. And in case I need it, if there's some crazy thing that comes out of the woodwork and stock prices get reduced, right? Because I'm not an all-in Tesla investor. I was getting up there, but I'm not there. So I still have a lot of capital to deploy. Yeah.
I want to define when I say all in and when people say all in my mind, what I mean by all in is that if for the money that I'm going to invest in stocks, I choose Tesla only. Okay. And you can certainly play and have fun with your lemonades and others, but let's say 10%. And I'm all in. The only stock which by the way, it's not really true. By the way, we own Amazon and we own Apple.
You're not all in. You're not all in.
Because it's in my Canadian RSPs that I'm not allowed to sell and buy Tesla. If I could, I would have, but I'm glad I haven't. But everything I can control, I switch to Apple. Does not mean that I don't have.
He just said Apple.
Freudian slip.
No, I said. What do you mean?
Apple, not Tesla. You
He said switch to Apple. I think he owns Apple.
Did I say that?
Yeah.
you did.
You love Apple. You love your Apple. You'll never let it go.
It's like an old girlfriend. He just just called her name.
Oh, no. Okay. But, it does not mean I don't have cash. It does not mean I will sell my real estate. It does not mean. But if terms of so if people might get confused when they hear somebody go, I'm all in Apple, Tesla, they might be thinking you should put all your money in it. You should take all your cash and buy it. And I think that we need to clarify that people should not do that. I've learned a lot this year. And that's one of the greatest things about this massive world events that's happening right now.
And you learned that.
This is not my first rodeo, buddy. Right. I'm old. I've been through every single crash.
That's good for you, but it might be good. Like Xander, it might be maybe someone doesn't have a family. Maybe someone's 25 and they've been saving up, and maybe they don't need the money. Maybe it is appropriate for them to put literally all their money in because they have very low living expenses, and maybe they're living at home with their mother and father, and maybe they have a job, and maybe they could sit there for a decade and be fine and wait for everything to play out. So I agree with what you're saying for if you don't want to lose your family or you don't want to lose your home, God forbid, and you want to, you're comfortable. But if you're playing a different game, like a teenager or a 21-year-old or a 26-year-old and has very little responsibilities, doesn't have a wife, doesn't have children, you don't need cars, and they're going to live a very, the only expense is a Netflix subscription, they could take more risk. They could and they should take more risk. So, Xander, you can probably speak to that.
It's Disney subscription now, but I gotta say, I'm. Do you have a bleep button, Herbert? This is BS. This whole like being defensive about financial strategy on a YouTube video, like you shouldn't listen to our how we're talking amongst each other, and we are.
Yes, you should. Yes, you should.
Well, I mean, like, look, the point is, I went all in, and even if I'm wrong, I'm not gonna blame anyone. This like, oh, we need to be worried about someone misinterpreting. We're not saying that this is what you should do. We're saying that this is what I did or you did. And I think what people like is that we have completely different strategies, as some people comment on YouTube, that like, Herbert says he's all in, and then apparently there's other things, and then there's, I will never do options, I'll never sell a share, but then he's like wishy-washy, and then Christian thinks he knows what he's saying, and then we're going up. 206 was the bottom, and now he's wrong. So like, I'm wrong too. And we're all wrong. So the point is, everyone
but you
is
got
wrong.
No, but Xander, I love what you said there, but no, I think I read stories. Look, I have a lot of time on my hands, so I read stories and I see people blow up their accounts all the time. So for me, I like saying, and they're not like you. They do regret it because they had $1 million and now they got 50 grand and they got a family of 4 to feed. So for them, they're not happy. They're like, oh my God, what just happened? I thought X was going to happen. It didn't. I didn't realize the leverage and they're on margin, and they go from $1 million to like 50 grand like that. And guess what? That is painful. Now, you could say, well, you did it, live with it. But guess what? It was avoidable because they should have not been taking that kind of risk. And now it's not them that it's just suffering. It's their wife. It's maybe they had to put a kid through college. Maybe they had another kid in what I'm saying is,
agreed. But earlier I just said, like, learn these lessons, those where $5,000 feels like an infinite amount of money. Learn that early on in your investing journey. You can't get to $1 million to invest by making these kinds of mistakes. So educate yourself was what I'm trying to say, is that we should take responsibility and understand what you're doing. Don't listen to anyone on the internet, but learn, right? Learning that there's all of these different ways to think about investing is the point. And let's have some fun. Let's not be like, defend every single thing we say as we're doing it.
No, we're not defending it. My predictions don't cost me anything.
Herbert is.
I'm fine.
Herbert is.
Oh, Herbert.
All right, so a couple announcements. So first of all, I think next week, 1 o'clock Tuesdays, we'll do this again on YouTube, but we're not going to do the simultaneous Twitter space. Right after this call, though, I'm going to go ahead and continue the Twitter space that we have, and I'm going to plan to do more daily Twitter spaces. but we'll separate out the two.
Is
so-
that so you could have people up? Because I know there's people
Yes.
raising their hands and stuff.
Yeah. And that's why it's a Twitter Spaces. We can involve as many people to come up. And then we're not going to have all these stupid audio issues that we've been having with you two. After 14 episodes, you guys, I can't
My
handle
audio's
it.
been great.
Sure.
My
No.
audio's like 2 times.
So-
You should
I-
have heard us earlier
So,
when you cut
yeah.
out.
Well, Herbert goes in and out too. He goes in and out all the time. I can't. hear him.
Okay. Anyways, I need new hobbies, guys. I'm watching more Korean
It's like we're
dramas.
married to each other.
I
Are we
am-
married to each other?
Korean dramas.
Korean dramas. I'm studying physics. I got invited, my wife and I, to 2 dinner parties, and both of them had a little clause, which is that only if Herbert doesn't speak about Tesla for more than 50% of the time.
Ooh, that's
Oh.
So it's like,
gonna be hard.
I better get new hobbies. I better stop doing this. So yeah, a little bit signal to me that's yeah, I can only talk to you, my friends here. You guys are the only ones. No one else. Okay, guys. Thanks everybody. Appreciate come visit us again next week, next Tuesday. Talk to you soon.
fun as
Bye
always.
everyone.
Later.
Yep.